Good afternoon. Today I'll be presenting a study on how the Internet of Things, or IoT, acts as a bridge to financial inclusion for marginalized communities in Padang Besar Perlis. Our focus is on informal entrepreneurs like warung owners who often struggle to access basic services such as savings accounts or mobile banking. We explore how IoT powered fintech solutions, including QR codes, mobile apps, and agent banking, can help overcome these barriers. While Malaysia is advancing towards a digital economy with initiatives like My Digital ID, many underserved communities still lack proper financial infrastructure. This research asks, can IoT fill that gap? The study has three main goals. First is to explore how these communities perceive IoT in financial services. Second is to evaluate the accessibility, convenience, and trust in these technologies. And third, to assess whether IoT can genuinely improve financial inclusion. Finally, we compare our findings with national studies to understand broader inclusion trends across Malaysia. Now let's look at the literature review. IoT supports financial inclusion by enabling real-time secure transactions through tools like mobile wallets, smart ATMs, and digital banking apps, making services more accessible to underserved groups. Sharizan et al. 2021 found that poor infrastructure, lack of documentation, and limited internet access still restrict many Malaysians, especially in rural areas. However, mobile and agent banking are expanding thanks to digital literacy initiatives. This study uses three key frameworks. First is leapfrogging theory, which is skipping traditional banking models with modern tech, and TAM, which is adoption depends on usefulness and ease of use. And lastly, UTAUT, which is shaped by performance, effort, social influence, and support. Despite efforts like My Digital ID and Jendela, only 44% of rural users have strong internet.
Our goal was to understand their level of awareness, usage, convenience, and whether this tool improve access to formal financial service like loans or savings. We set four main objectives. First, to access their awareness. Second, to see how often they actually use this tool in daily transaction. Third, to understand if the tools are convenient and beneficial. And lastly, to find out if these technologies help them access financial services. We use a quantitative approach and collect data through a Google form from 44 respondents who were either warung owners or entrepreneurs. These individuals had some level of digital exposure, making them relevant to our study. Most respondents were young, 18 to 25. 65% were women, and many had low to middle income, which aligns with our focus on marginalized communities. The questionnaire covers six key areas, including familiarity with digital tools, usage frequency, convenience benefits, and whether they will recommend them. For our analysis, the results show high awareness and usage, with many respondents agreeing that digital tools are convenient and help improve access to financial service.
We analyzed six key themes, which is first one, familiarity, which is most respondents are highly familiar with digital tools like QR codes and e-wallets. Next, customer adoption. Customers often use digital payment methods at warungs. Third one is IoT in business, which is IoT tools such as POS systems are commonly used in business operation. Next, perceived convenience, which is users find digital tools convenient and helpful in managing their finance. Next, access to service, which is digital tool help improve access to financial service like loans and services. And the last one is willingness to recommend, which is most users are ready to promote these tools to others in their community.
First of all, the bank accounts. Sharizan and colleagues observed that while approximately 50% of rural B40 households possess a bank savings account, a higher proportion, about 70%, have subscribed to Takaful, indicating the increasing participation in informal financial system. Secondly, the government initiative such as BRIM and BSH. The government initiative have played a critical role by requiring recipients to open bank accounts, thereby directly encouraging financial inclusion. Furthermore, the digital adoption of the marginalized communities. Our current findings show a high level of digital familiarity, about a mean of 4.40 and active usage mean 4.18 of financial tools in daily transactions. This illustrates how rural B40 communities are adapting quickly to digital shifts. And additionally, IoT as an enabler for the marginalized communities. The role of IoT and mobile technology is vital, acting as a substitute for physical infrastructure by enabling access to financial services remotely, which is particularly valuable in undeserved rural areas. To add more about the barriers versus the reality, Although financial institutions cite barriers such as poor connectivity and documentation, respondents in our study noted that basic identity documents are often sufficient, challenging the assumption that structural issues always impede access. And finally, the peer influences and CSR. Additionally, peer and community influences play a significant role. CSR initiatives like Zakat or Takaful Aid often couple account correction, embedding financial inclusion with cultural and religious frameworks. Adding to the analysis before, the next part is the high convenience and usage. Digital financial tools are not only familiar but also perceived as highly convenient. Our findings show a mode being 5, signaling that these tools are strongly favored in routine use. Additionally, for the national infrastructure, the Jendela Plan, which is the Malaysia initiative to seek bridging rural connectivity gaps, aiming for near universal 4G and broadband coverage, which is crucial for extending digital service to remote areas. Additionally, IoT-led platforms, which is initiatives such as PEDI, Digital Economic Centers, and Minecraft Shopee have enabled rural entrepreneurs to engage in e-commerce, showing IoT's capacity to uplift marginalized communities economically. Uh, Adding to the analysis, leapfrogging via mobile first approach, as Malaysia is demonstrating a leapfrogging strategy where communities keep traditional financial infrastructure and adopt mobile first solutions such as e-wallets and QR codes. Finally, about the connectivity challenges of the marginalized communities, these structural inequalities remain. OpenSignal reported that rural users access 4G only 44% of the time, compared to over 80% in urban settings. Thus, the digital divide persists, albeit narrowing through policy intervention.
To enhance financial inclusions, efforts should focus on expanding rural internet access through initiatives like Jendela, boosting digital literacy with hands-on community training, especially for older adults, and empowering local advocates to promote digital tools. Creating innovation test zones can encourage safe fintech experimentation, while financial support through grants and low-interest loans can help small businesses adopt digital solutions. Additionally, linking fintech with microfinance by using IoT generate can enable tailored financial products and build better credit profiles underserved groups. IoT-based fintech is a key driver for financial conclusion, not just a tech upgrade. With strong infrastructure, proper training, and supportive policies, Malaysia can bridge the financial gap and help communities participate in the digital economy.